be in English language. Mr. Baca.
Thank you. Thank you. My name is Carlos Baca. I'm Vice President of Investor Relations for Fortuna. Thank you very much for joining us this morning. It will be a pleasure to present Fortuna to you. For those who don't know us, we are a Canadian mining company. We produce silver, gold, and some base metals out of our Peruvian mine. We're listed in the New York Stock Exchange under the ticker FSM, listed in the Toronto Stock Exchange under the ticker FVI. We trade around 3 million shares per day in New York and around 800,000 to 1 million shares in Toronto. So with that, allow me to start. So let me tell you a little bit about Fortuna, Fortuna's leadership team. We are a company that is backed by a strong management team with experience in the regions where we operate, in Latin America and West Africa. We focus on gold and silver. We have a robust exploration pipeline, which generates a lot of opportunities for our shareholders, especially cheap ounces, right? Because the cheapest ounces that you can deliver to our shareholders and potential investors are those that you can discover via drill bit. I want to also highlight our capital allocation priorities. We've gone through a 2-year capital-intensive phase as we were building our Séguéla mine in Côte d'Ivoire. So now we'll be focusing on strengthening our balance sheet. Last quarter, we paid down $40 million of our revolving credit facility. We're also investing in our exploration programs across the board. And of course, looking at distressed ideas that we might find in junior companies, like what that can allow us to grow and better position ourselves in the regions where we operate. With that, we closed the acquisition of the Diamba Sud gold project in Senegal. With that, we've enhanced our presence in West Africa. We acquired Chesser Resources, which was a Australian-listed junior company. I'm very proud to present this slide. This tells us a little bit about the story of Fortuna. I joined Fortuna back in 2007, so I'm very proud to present this. We employ over 5,000 people in countries Canada, Mexico, Peru, Argentina, Burkina Faso, Côte d'Ivoire, and now Senegal. The company was established back in 2005. In 2006, we reinitiated production at our Caylloma mine. That's the first asset we acquired. We produce silver at a rate of 1 million ounces per year, plus base metals, zinc and lead. In 2006, we also acquired a 76% stake in what is now our San Jose mine. It used to be owned by a junior, a Canadian junior. We acquired it in 2010, and that's when we started the construction of our mine. So that proves management's ability to take an exploration idea, grow a deposit, and then go through the permitting process, build a mine on time and on budget, and then of course declare commercial production. And that was done in 2011. 2011. So what you're seeing here is the production out of Caylloma. Then you see this increase in production based on our San Jose mine. In 2016, we acquired our Lindero Gold mine, which is located in Argentina. The increase in production is the continuation of San Jose and Caylloma, of course. In 2017, we declare a construction decision, and in 2020, Lindero starts producing gold. Unlike Caylloma and San Jose, our Lindero mine is an open pit. The previous two mines are underground mines. The spike in production is Lindero's contribution. In 2021, the company made a bold move and we acquired Roxgold, which was a Canadian mining company with assets in Burkina Faso and Cote d'Ivoire. That's the spike you see here, Lindero, and then you see here this spike in production is Yaramoko. And in 2021, we also declared construction at Séguéla. This year, we're guiding to deliver between 412 and 463,000 ounces of gold equivalent. I'm very happy to report that third quarter was the first producing quarter of our Séguéla mine, the new flagship mine of the company. So I'll be letting you know how the mine's production and all-in sustaining cost impacted our consolidated figures. This is our footprint. Our corporate office is in Vancouver. Our Latin American operations are headed from Lima, and our West African operation from Abidjan. We'll be servicing our Diamba Sud project from Abidjan too. So San Jose this year is scheduled to deliver between 5.3 and 5.8 million ounces of silver, plus 35,000 ounces of gold or so. Caylloma, steady performer, delivering around 1 million ounces of silver, 1.1 million ounces of silver, plus base metal credits, lead and zinc. Our Lindero mine should be delivering around 100,000 ounces of gold. Yaramoko, we just increased guidance to 110 to 120,000 ounces. It was an 18,000 ounce increase in guidance. This is on the back of some exploration success we've had. You should be expecting to see a technical report and an updated mineral resource by the end of the year at Yaramoko. And of course, our Séguéla mine, right? Which for the second half of the year should be delivering between 60 to 75,000 ounces of gold. First gold pour was on May 24th. We believe Fortuna is undervalued with respect to our peers, depending on which metrics you want to use, EV to EBITDA, price to cash flow. You can see how undervalued we are, no? Our Q3 production results, we delivered 94,000 ounces of gold, 95,000 ounces of gold, plus 1.7 million ounces of silver. In total, 128,000 ounces of gold equivalent. You can see the impact of Séguéla's gold production here, 43% increase with respect to Q3 2022. Our financial figures for the third quarter: sales of $243 million, adjusted EBITDA of $104 million, free cash flow from operations of $70 million, and adjusted net income of 29.6. As you can see, all of those metrics with respect to the previous year are quite strong when compared. This shows you our 9-month production. So as of the end of Q3, we've delivered 219,000 ounces of gold, 4.5 million ounces of silver, or 316,000 ounces of gold equivalent. We're clearly on track to meet our annual guidance for 2023. Once again, this is the impact of Yaramoko and Séguéla, of course, mainly Séguéla. And this is what you've all seen, those of you who follow our news flow. We reported our Q3 financials yesterday morning. So you can see that our sales, 9-month sales, are in the order of $580 million, adjusted net EBIT of $214 million, $87 million in free cash flow from operations, adjusted net income of almost $50 million, EBITDA margins of 37%. We run a very healthy business. We generate cash flows, which of course are now servicing the payment of our debt and fund our exploration programs and our capital projects, right, throughout the different mines. This is our pipeline, our portfolio. We've allotted this year $26 million for exploration. Here on the top part of the pyramid, you have our producing mines to highlight the fact that Séguéla was delivered this year on May 24th. We did our first gold pour. So now Séguéla has moved from the development section of the pyramid to the production side. And you can see here now our exploration, our key exploration initiatives. You can see where Diamba Sud is right now, as relayed on our news release yesterday. We have around 11 drill rigs turning in the different countries where we operate, and 3 of those drill rigs are already in Diamba Sud. So what you should expect from Diamba is an 18-month drilling program, exploration program, and then hopefully grow the resources to 1.5 million, 2 million ounces in reserves. We have to prove that deposit and then potentially make a construction decision. And what we will be doing at Diamba Sud is a carbon copy of what we did at Séguéla. We have also made an important discovery in Mexico in our San Jose mine, the Yessi Silver gold vein. It's a blind structure, so we're in the process of drilling it, and hopefully it will prove, it will grow, and it will add to our life of mine and be incorporated into our mining plan. And we also have ideas in Argentina. That's where our Lindero mine is, in Mexico, and Côte d'Ivoire, Senegal, Argentina, and Burkina Faso. Never stop drilling. Séguéla. First producing quarter, exceeding nameplate capacity. The operation delivered 31,000 ounces of gold at an all-in sustaining cost of $788 per ounce of gold. So we are well positioned to deliver to meet our guidance and both on the production and on the cost side. Show you some photos. This is some antenna pit mining activities. That was the first pit that we started to mine. Here's the processing plant, $173.5 million invested in this mine. Processing plant, crushing, high voltage substation, ancillary facilities. Our tailings dam. The beauty of our Séguéla mine, aside from having been able to deliver the mine on time and on budget, is the exploration, the underlying exploration that lies within our land package. We have control of a 30-kilometer trend. What you see highlighted in blue are the deposits that make up the reserves and resources. All of these deposits in blue, except Sunbird, make up the reserves of Séguéla. This operation has with reserves has an 8.6 year life of mine. This is where our Séguéla plant is. So you have to envision our Séguéla mine as a series of open pit deposits that contribute to our processing plant. All the high-grade deposits still are open at depth, so we need to keep drilling and test the potential to once we deplete the open pit portion of the deposit, we can flip to underground. Some deposits, highlights of 3 deposits. Kula, I want to bring your attention to the grade, 6.5 grams per ton. We have 243,000 ounces of gold in the Kula deposit, open, so potential for underground mining. Ancien, 4.9 grams per ton, 211,000 ounces of gold contained. Once again, open at depth, potential for underground mining operations. Sunbird, we have here in between indicated and inferred approximately almost 800,000 ounces of gold. As you can see, all those resources are contained within this black line. That's the shell where the resources are. So all the material that you see on these deposits that are outside this shell have not been incorporated into the resources yet. To give you an idea of Sunbird, look at the grades. No, we have very good intercepts, which attests for the exploration prospectivity of this land package, something that really attracted us when looking at Roxgold back in 2021 when we announced the acquisition. Excited to have been able to prove the quality of this deposit. Lindero is our longest life of mine in our portfolio. It has a 12-year life of mine. Last quarter, it delivered almost 21,000 ounces of gold at an all-in sustaining cost of $1,600 on a 9-month basis. It's produced 71,000 ounces of gold at an all-in sustaining cost of $1,569 within our production and cost guidance. Exploration ideas at Lindero. The Izaro target has the potential to contribute to the mill feed. So we're doing some work here, proving the deposit. San Jose, our largest silver producer, delivered 1.4 million ounces and 8,000 ounces of silver and gold, respectively, at an all-in sustaining cost of $18. On a 9-month basis, we've delivered 3.6 million ounces of silver and 22,000 ounces of gold at an all-in sustaining cost of $18.65. We should be expecting to deliver our silver production in the lower end of guidance, and our all-in sustaining should be above guidance due to an illegal blockade carried out by the workers' union back in the second quarter of this year, which was solved, and that just generated a delay in mine development, hence a delay in our a lower production than expected. We discovered the Yessi vein is a high-grade blind vein. One of the intercepts has over 1 kilo of silver equivalent. So we're working on this, and hopefully we'll prove and add to our life of mine. Yaramoko, our mine in Burkina Faso, delivered 89,000 ounces of gold as of the third quarter at an all-in sustaining cost of $1,429. So we're on track to meet revised guidance and cost guidance too. This is the exploration success we've had that I mentioned earlier in the presentation. This should be incorporated into the mineral resource and minerals estimation of the mine before year end. Regional ideas for exploration. Caylloma, a steady performer. This year, as of the end of the third quarter, delivered 0.9 million ounces of silver and base metal byproducts at $19.03 all-in sustaining cost, clearly on track to meet both production and cost guidance. More exploration at Caylloma. Diamba Sud, the project we just acquired. Once again, you should be seeing exploration programs conducted for the next 15, 18 months with hopes of potentially growing the deposit and making a construction decision. Greenfields exploration, several ideas in West Africa, same in Mexico. We are well rated by ESG rating agencies. This is an important graph here that shows how our reporting has evolved and how this is being captured by the different agencies that rate our ESG work. This is some of our ESG KPIs. Our CEO, 78% of his compensation is at risk. And with that, I want to thank you for joining us this morning, and anything you need or any questions you might have, I'm at a booth outside. Thank you so much. A pleasure.